Good evening, traders. It's Mark here from the Day Trading Room. The time is 20 to 8 London time on Tuesday, the 12th of October, and a little bit of a gap between videos, and didn't get a chance to put one up at the weekend. I've been installing Windows Ultimate 64-bit as I realised after I'd purchased another 4 gig of RAM to go in my machine that the 32-bit operating system of Windows 7 doesn't support any more than 4 GB of RAM. So I decided to do a fresh install, which I'm pleased I've done, but it just took a little bit longer than I anticipated, so I didn't get opportunity to do the weekend video or upload the video on algorithms. But that's on its way. Just got to transfer a lot of my data over from the old hard drive, but it's good to have a fresh hard drive. It's running smoothly now. I've got my RAM upgraded, got my new hard drive in, been setting up my trade station all day yesterday. So yeah, pleased to have done that. I'm ready now for hopefully the increased volatility as we push into Christmas. So let's run through what we had today. Bearing in mind I didn't trade at all yesterday because of the computer. I always cautious when I'm coming in. I like to just be careful and wait until I see a really great trade setup. Even one day away, you can fall out of tune with the market. You can, even though you've got your levels marked in. Incidentally, I had to remark in all my levels and put it on my custom indicators I've got on little bits and pieces, little tricks and little things I've got going on here. So what did we do today? Well, we got this situation. We pushed lower off the open, and we just found some really good support at the 10.912. It kept poking through to 10.910, but really the 10.912 was the key point. Now, the biggest clue we had at the open was the fact that we'd pushed down straight from the opening print, which was underneath yesterday's low. We'd attempted to push back up, all very bearish signals. The fact that we were holding below yesterday's low, we were well below the opening print. But the most important thing for me is the volume was consistent and the ticks were really in the lower half, even the lower third of the plus 1,000 to minus 1,000 range. We were getting ticks of minus 400 to minus 750 in the first 5-6 minutes, with not even an attempt to go positive. Now for me, it immediately cancels out any long trades. I do not want to get involved in long positions. I want to just look for shorts until those ticks at least go positive. So what did I do at the open? Well, as we were this 912 level became some good support, and it kept poking its head below it and pushing back up. Once we got this failed attempt to go through the open and an immediate roll back over, it became a great little shorting opportunity. Why? Because the risk is quantified. It's an obvious risk. You've got a great target in mind. Ultimately, you want the overnight low to be tagged. You've got a scaling position of just popping under. You've got a scaling point of just coming underneath that low, the last support, should I say, at 10.912. So the trade sets up. Even if you don't quite think, even if the odds maybe aren't as good as you hope, the fact that the risk reward is very quantified, and the fact that the ticks are very negative, and the fact that you've got a lot of things stacked in your favour, says it's worth a go. This is the sort of trade that you can take. You've got minimal risk. You've got a great chance of getting a good move on it. It's well worth a short. So as soon as I saw this push down here, it was this candle here actually. Little push back up, and then there's my short there. Where's my stop going to be? It's obviously going to be above that swing high. I do not want it to keep probing. If it does decide to keep probing at the highs, then the trade's off. It's turned into a mixed open. What I'm doing when I'm looking for that short is I'm looking for the sellers to become impatient and to overwhelm this buyer at 912 and 910. Now, he's the only person at the moment, whether it's one guy, whether it's multiple guys. I'll call him a he singular, but it could be many. As I've talked about in the algorithm video, which is up now, he's being tested. What I'm actually doing when I'm taking that short is I'm waiting for the sellers to become more aggressive and for him to stop buying to complete his order, or for him to become more passive. Now, if it then ends up testing the open and retesting the highs of the opening range, I'm not interested. The trade's off. I'll scratch it. I'll take a couple of tick loss, whatever. The premise has changed. There's no trade for me. As it happens, we broke straight through. It was a good tape read. The volume had picked up nicely. That's the important thing to see. The volume had picked up nicely. As we started to roll over, we broke through, got a first scale over. I like to get the first scale just as we break through, just in case it's a fake. In that way, I've hedged my risk. I take half off, whatever that may be. If it's 15 ticks, sometimes it's 20, sometimes it's 10, sometimes it's as low as 8. I'm reducing my risk so that if it does become a fake out, I'm not still sitting there with my short and it's coming all the way back and it's not working for me. That's my strategy, that's my trading plan, that's how I manage my trades. So that's what we did. We rolled over, took some off. You're expecting a little counter trend move. Now, if anyone hadn't seen the tape weakness there and had looked for that breakthrough, then this is an absolute perfect setup, an absolute dream. It pushes right back up to that level, pauses, but look at this volume here. Right here, you've got such a low volume. You've got continually high volume here, or reasonable volume at the open. Then you come down here and you've just got such low volume, and that's on that little tiny push up, which is just people like me just taking a bit off the table, covering a little bit of short. Maybe you've got some guys stepping in, some retail stepping in on the buy side. It's nothing. You can see it's not significant. More importantly, it's not market movers. It's not people who are moving markets. So that was a fantastic little short for anybody who didn't get that break. Absolute golden setup. But for me, I stayed short. I was happy to stay short while this came up and retested that low, and it just broke through. And my exit was either going to be the minus 1,000 ticks, as I've said before, or it was going to be the overnight low. We tagged the overnight low, and I'm all out here. We went another 20 ticks lower, but that was my target. It was a good move, and that's the premise of the trade. If it goes further in your direction, then so be it. That's not what trading's about. Trading is about taking a chunk out of the trade that you're trying, that you got to manage the trade, and that's all you're trying to do is take a chunk out of the move. So, that was a great start for me. Looking for the long at that point, we were quite overstretched. We've moved down a good 50 ticks. 50 tick move off the open before before the quarter past is unusual, especially when it's this sort of volume grabbing at the moment. But you never step in front of it. You never step in front of an opening drive until you see some sort of flush. Now, for me, that's got to be 1,000 ticks one way or the other. If I'm looking to short on a positive push up, I'm looking for plus 1,000. I'm looking to go long, I'm looking for minus 1,000. But that doesn't mean I just dive straight in. If I wait for those low ticks, I'm waiting for those low ticks, that good spiking volume. So look here, spiking volume, low ticks minus 1,000. Yeah, I'm not looking just to go in as soon as I see that. My then long becomes activated, if you like, and I'm now looking for a long trigger. Now that's got to be some sort of bottoming pattern, but I've got to see that first. Otherwise, I'm just stepping in front of it anywhere, and I've got no edge. I've got to see that first. I've got to see that flush, and then I'm tape reading. I'm tape reading hard. I'm looking at time and sales. I'm looking at the dome. I'm seeing the bids. I'm seeing the offers. I'm watching them get pulled. I'm seeing who's the more aggressive player, and I'm waiting to see. And my perfect setup would be a double bottom. I'd want to see it tag. There's my low. A little push up. Another push low. A few ticks lower would be absolutely perfect, and then straight back up. There's your long. There's your stop. That's my ultimate setup, but it doesn't always happen like that. You don't always get the precise setup you want. But we've got something similar. We've got a push lower, got 1,000 ticks. We've got another little attempt lower, small counter trend rally, another attempt lower here on this candle that I'm pointing to on the left, the red one. Little attempt lower. The thing that did it for me, that gave me the green light, was the fact that the ticks hadn't even gone low. The ticks were around the same level that they were when the market was undecided up here. So for me, that's indecision. It's indecision, and you've almost got a rubber band situation. So even if they're still undecided, the chances are that the market will drift back up a little bit before continuing lower. Or at the very least, at the very least, it will do that. Otherwise, you're expecting some buyers to become a little bit more aggressive and to consider this as a bit more value and step in. So that was my long, but I only took on half size because as I say, I didn't quite get that push lower that I wanted, and my risk was still going to be, I would have to be below that low, but I'd have to be maybe 6 or 7 ticks below that low. I don't want to be just a few ticks this time because a double bottom is still on the cards, so it's a little bit wider stop than I would like to take, so I reduced my size accordingly. That worked great. We pushed straight back up, and as I've mentioned before in the other videos, I use the 20 period moving average. I put that on when we've got a big move, and I like to look for a move back to the moving average. So there was my exit there. I didn't take the short there. If I hadn't have been long, I probably would have taken the short because of this confluence of resistance. You've got the overnight low, pull back to the overnight low. You've got the moving average. You're expecting some sort of counter trend move lower. We didn't get that counter trend move lower, and we got another push higher. Now this sort of thing's rare. When you see a movement like this, you're expecting some sort of counter trend, but what you're trying to do is you're trying to time the counter trend, when the counter trend move will end and when you can initiate your shorts. Easier said than done, but we've got different tools we use in our arsenal. We've got the moving average there. Another thing is when we popped up to this VWAP, as we were popping up to this VWAP, I put my 50% retracement tool on, and I used that as a guide. Move back up, 50% of the move, VWAP's there, and then I don't step in front of the train, as I've said before. I like to wait and see so I can quantify my risk. So when I see this tail, and then I see the next candle, I see that candle close, I see another little doji candle, it's worth a go to me. It's worth a go. The buyers, they're running out of puff, the ticks aren't still pushing higher. We've got a bit of a tail action here. You've got a VWAP, you've got a 50% retracement. It's well worth a go because the risk is quantified. Your stop's going to be there because the trade is negated, the tail is negated if it comes up excuse me, and the market tries to push higher. Didn't get a lot out of that. We've got about 10 ticks. It pushed lower, started to push back up, tried again, and we just didn't get what we expected. I was looking for at least a retest of this excuse me, this swing low, if not the overall low. Didn't happen, but I was still pleased to take some off the table there. And that was it. Didn't get involved in anything else until the Fed minutes coming out at 7 p.m. London time today. Absolute classic trade here. I've only got 2 minutes left to talk through this trade, but classic trade. We'd push lower. This was a real Tate Reid stuff. We'd push lower, failed, started to push higher. I was straight in at 26. Previous high was 37, I think. So I had an order sitting at 36. That was filled straight away, and then I got filled at 46. Now, yeah, you're saying, why are you getting filled at 46, Mark? Well, I'll show you why I use 46 as my second scale, and that was because the ES had filled its gap, and more importantly, key level we've been looking at, everyone's been looking at the moment, Dow Cash at the bottom here, 11,000. Look at that, right, 11,000. It was equivalent of 46 on the futures, so it made sense to me to do the majority of my scaling there. Obviously, my ultimate, I'm going to hold one for a runner. I'm expecting a little bit of a pullback. Just one little bit of a position left. The majority's gone. I'm just holding it just in case we can get a little push move up. My obvious target is going to be the YM gap fill, and then we got that bang on. I thought it was absolutely perfect at one point, but then we pushed on another 15 or so ticks, but I wasn't involved in that. But a nice end to the day. Some great little setups. That sort of setup there, when you've got a reprice, you've got a push up, you've got a reprice, and then you've got a second push up, is a real bread and butter trade. And if anyone's looking to add some sort of trades to their arsenal, then I would really recommend looking closer at that and looking back at some of those patterns, because they work really, really well. Anyway, that's it. Running out of time. Send your comments in. Email me, mark@thedaytradingroom.co.uk, and look out for some more videos shortly. Good trading, guys. Manage your risk, and we'll see you soon.